morning, I am Bontlefela Kaumolapo and welcome to Boardroom Forum Live. Today we'll be focusing on enabling sustainability transformation in the public sector, especially on sustainable financing and what that means for the public sector. I'm joined by Albie Alant. He is in PwC office in the corporate finance team, specializing on sustainable financing solutions for infrastructure projects. Albie supports both public sector and private sector PwC clients to raise funds for large-scale infrastructure projects. Welcome, Albie, and thank you for joining us.
Thank you very much for having me.
So, Albie, let's start at the beginning. What is sustainable finance?
So, if we look at the greatest challenges of our time, it is addressing climate change, income inequality and poverty, as well as energy security. And what sustainable finance aims to address is to specifically focus on the environmental, but also on the social aspects as well as governance.
Right.
Whereas sustainable investment has an aim of looking at long-term sustainability and realizing positive impact for society as well as the environment, compared to traditional financing, where often some of these risks are not factored into the solutions initially and exposes those investments and the stakeholders with greater risks in terms of environmental and financial risks.
Right. So is sustainable finance mostly considered as an environmental issue?
So traditionally, climate change was considered an environmental issue, but in fact, it is very strong links and dependencies in terms of economic and social impacts. And if one considers the sustainable financing framework, it will, without addressing the requirements and the risks, it exposes vulnerable individuals and companies in our country. Therefore, the strong need to look at a multidisciplinary approach when considering sustainable financing.
Right. And how does that differ then from the traditional financing?
So traditional financing was mostly set up to focus on maximizing returns and profits and gains for particular shareholders, whereas sustainable financing is focused on addressing environmental issues, but also looking at society as a whole and benefits. And it acts as a mitigant against those environmental and social risks while delivering a long-term sustainable economic profile which will benefit shareholders, but it's not the main consideration.
Okay. And who's responsible then, and the caretakers of the sustainable financing gap?
So not the private sector or the public sector can deliver this on their own. It is absolutely critical that collaboration platforms and initiatives is established in order to pool blended financing from both the public and the private sector in order to deliver on the objectives in terms of driving sustainability, economic growth, job protection and creation going forward.
And also what is the general market responsibility then for sustainable financing?
So we've noted from our clients that there is a strong drive not to simply focus on maximizing returns and looking at shareholders as the dominant audience or decision makers.
Right.
We see implementation of environmental, social aspects, employees, regulators. So it's a far more wider encompassing framework that's being considered. And there's a definite shift in the market that is driving decision making and corporate policy. Now, the same is true for the public sector in terms of initiatives in order to decarbonize and creating those enabling platforms to drive sustainable financing solutions.
So, Albie, what do you see the role of the public sector to be?
So if we look at some of the greatest challenges of our time, it is addressing climate change, it is addressing income inequality and poverty, as well as energy security. And if we just look at the backdrop of our country and where we are at the moment, there's a lot of pressure on the economy, as well as specifically the private and public sector, to decarbonize and to find not just energy security, but to decarbonize their own operations in terms of the available electricity which is on the grid.
Right.
So if we look at what the public sector can do to unlock that, it would be to reform regulation and to create an enabling environment where the public sector can effectively collaborate with the private sector in terms of rebasing how we look at and how we drive new opportunities and infrastructure investments. And it's important to note that that can't be done without the buy-in of the public sector to lead and pave the way for the private sector in order to address that.
Right.
There's a key role in terms of looking at coordinating blended financing. So the government has allocated funding specifically to address specific initiatives in terms of social and macroeconomic stability, whereas the private sector, of course, looking at their own stakeholders. But if the government can provide the platform whereby those funding sources are combined effectively to blend, then you can leverage up on that and have a far greater impact through any one of the individual parties, being public or private sector.
Right, right. And what sort of initiatives could we have in place that could actually unlock the sustainable finance?
So I think in order to drive sustainable financing going forward, which also then links into driving sustainable and lower carbon infrastructure, energy, and other ancillary services, we need to look at capital formation that is earmarked and that's mandated in order to be put to work into sustainable financing opportunities.
Right.
So the public sector can facilitate in providing incentives for a reallocation of capital from various funds, be private and public, in order to drive that.
Right.
Then definitely looking at the promotion of new technology and embracing that and implementing on an accelerated basis, but also the public sector to act as a catalyst for innovation specifically, and to seed in the form of new innovation in the form of capital and risk taking to step into the gap in order to unlock new opportunities.
Right.
We need to look at investments on a long-term basis and incentivize funds to invest in sustainable opportunities that will drive not just economic growth, but also uplift socially while protecting the environment. But the market will need to see an incentive and a motivating factors, and that is done through regulation, tax incentives, and other benefits in order to get there.
Okay. And just, I mean, is there anything else that you would like to add? I mean, this has been quite insightful, but anything else you want to add?
I think if we look at sustainable financing as a topic and we look at decarbonization, social requirements, job creation, and economic growth, sustainable financing provides a fantastic opportunity for the private and the public sectors to collaborate.
Correct.
And we've already seen firsthand projects and programs in the market where there's precedent for implementing this, where communities gain significant and tangible value from large-scale infrastructure programs, and then pooling funding from government and the private sector, and using existing government assets and complementing that with new funding raised from the market in order to, one, effectively utilize existing assets and blow new life into our assets that are underutilized.
Yeah.
And at the same time, protecting our economy, protecting jobs, protecting towns, and ensuring that we can continue to operate on a sustainable basis, but also importantly have the ability to grow new industries and to expand on some of our leading companies and industries and sectors.
Well, thank you so much for that, LB. That was a very insightful conversation. And thank you to everybody who's joined us this morning.